Everyone is looking for the strategy that just works. No drawdowns, no losing trades, just consistent wins. But that's not how trading actually plays out. Hi, I'm Tim from SPX Option Trader. And if you spend any time around trading, especially online, you will see a constant flow of strategies being promoted. There's always something new, something that looks like it's working right now better than anything else. And that creates an expectation that the right approach should not really struggle. That if a strategy is good enough, it should produce results quickly and keep producing them with very little interruption or drawdown. But real trading doesn't work that way. An approach that has actually been traded over time through different types of market conditions is simply going to have losing trades. It's going to have periods where things don't go well. Sometimes that lasts for a few days. Sometimes it lasts longer. That is simply part of trading. The problem is how traders respond when that happens. A few losses are experienced, and immediately the strategy starts getting questioned. And then it starts getting adjusted. Maybe position size changes. Maybe a new filter gets added. And eventually the trader starts looking around at something else, something new that seems to be working better. And that's where the cycle begins. A trader experiences a rough period, loses confidence, switches approaches, and ends up facing the same kind of difficulty again. And it starts to feel like the answer is always just one more strategy away. But usually, that's not the real issue. The real issue is that nothing is being followed long enough to experience the full impact of the strategy. Now, this doesn't mean strategies should never be changed. But in a lot of cases, the strategy gets dropped before there has been enough time to judge it fairly and properly. There's an old saying about not switching horses in midstream. Well, that idea applies to trading more than many people want to admit. Every time a trader changes direction, the process resets. The learning resets. The confidence resets. The understanding of how that approach behaves under pressure resets. And over time, that creates more inconsistency in results, not less. A strategy that has only worked for a few weeks doesn't tell you very much. A strategy that has been through different market conditions, different volatility environments, winning periods, losing periods, and still held up over time is a very different thing. And that's usually not what traders are looking at when they switch. Most of the time, they're reacting to only positive recent results. And sometimes the problem is not that the strategy stopped working. Sometimes the problem is that the trader realizes they don't actually have the tolerance for the drawdowns, the pacing, or the uncertainty that comes with that specific approach. But instead of identifying that clearly, they treat it as a strategy problem and they start over with something else. That happens all the time in trading. The strategy changes, but the pattern does not. And after a while, that becomes the real problem. Not the system, not the setup, not the market. The habit of abandoning one approach after another before there is enough evidence to understand what is actually happening. A trader can spend years doing that and still believe the missing piece is out there somewhere. They just haven't found it yet. But in many cases, the issue isn't finding something new. It's not staying with something long enough to actually see how it works.